Ahoy me hearties, and welcome to the Pirate Traders live stream. My name is Charles. Today we're going to be focused on the ES, the NQ, and how they move through the two-way auction process. Why am I going live today to the public YouTube? Because finally the market's doing something. I've been back from vacation for 2 weeks, and yesterday was the first day where the market actually got interesting. And I think today could be another interesting day. So I thought I'd go live to the public and we'd all hang out together. If you're watching right now, please smash that like button. Share on your social media. Let's spread the word. Let's get some new peeps here. We only have 40 people hanging out so far. So it'd be great to try to break 200 viewers at some point today. All right. Well, what are we looking at for the market? Well, yesterday the market broke. The reason I say the market broke is even though we have been trending higher on the daily time frame, intraday, the market has been very rotational. It's been very choppy, very sideways. It hasn't had a lot of momentum. Well, yesterday we broke that choppy sideways thing and we had a trend day up all day long. Okay, so if we expand out the profile, we can see from the moment that we broke the initial balance in the morning in the E period, the market went straight up all day into the close. We never made a lower low all day long. Every 30 minutes, the market continued to move higher. That is very bullish to see. It is also very bullish to see that we left behind a set of single prints. That is a sign, in the G period, in the H, in the I, in the J, it's a sign that we still had momentum. Well, we also left behind single prints at the end of the day, what we call a spike up at the end of the day. Today, we are opening inside that spike, which is also bullish. Just like leaving these single prints behind yesterday throughout the day told us the market still had momentum to keep going throughout the day. If we can stay above 56.76 this morning, it is a sign that we still have momentum here today. And also because of the reaction to the CPI news this morning, which came in better than expected, the market made this huge move to the upside, heading up to test 57.08. And because of that, that is now a week high. Any all-time high that is created in the overnight market is considered weak. So quite simplistically, this morning, as long as the market stays above 56.76, I am bullish to head up and test 57.08 and monitor for continuation higher from there. What do I mean by monitor for continuation higher? Well, I think we can get to 57.08. Again, if we stay above 76, I think we can get to 57.08, but I don't know what happens next, right? We may just look above that level and fail and pull right back in, or we may get up there and continue the momentum to the upside, or we may get up there and go sideways at higher prices. So I got to wait and see what happens once I get there, but that is the target to the upside for today, that overnight high. Okay, so what am I looking at to tell me to get into a trade to target getting to that overnight high? Well, the overnight range created a very nice looking low. This isn't technically a 45-degree angle because it didn't come straight from the low, but the fact that the overnight never tested the base of the spike tells me that there are a lot of buyers in this market. So if I see support anywhere between 56.83 and 56.76, that support is buyable for a move higher. If the market gets below the base of the spike up, so if this morning the market works its way through what will likely be a lot of support in here, so I don't think we're going to fall like a brick through it. I think they'd have to keep poking and poking and poking and poking. But if they're able to get through there and then they get below 76, I would be looking for a pullback down to 56.64. There is a little bit of support up here around yesterday's POC at 56.70, but I don't think that would be enough to hold the market. I think if the market was going to go higher today, the support should be in here. They shouldn't need a pullback to here. So if it does break the base of that spike, I think we're heading to the first week reference. Okay. As always, when the market makes a move built on weakness, as it has, the entire move since the breakout of balance from last week has been on weakness, right? Every low has been weak, meaning we've left behind stops that need to be taken out. So if we do break the base of the spike, that could cause a liquidation lower to start repairing some of these weak references. But that's an awful lot of guessing ahead of time before anything happens. So if the market starts to sell off, stay tuned and I'll explain what references to look for and when. But for the moment, I am bullish, assuming we're going to get some support and try to take the market higher today. And I will let you know when that opinion changes. Once again, if you're watching and you have not hit the like button, we got 87 people hanging out, but only 25 thumbs up for the pirate. Please smash that like. I really would appreciate it. I took a month off. The YouTube algorithm is punishing me. It's saying, Charles, you don't get any new viewers because you didn't stream every day. So your likes, your subs, your shares on social media would really help this morning. Raphael, good morning to you. Nap is here. Will in the house. Vu, good to see you. One Punch Panda, good morning. Malang is here. Scalp Demon. Good morning, pirates and public. Good morning to Frito. Jay, casino's open. Let's friggin' go. Other Jay, another day in paradise. RK in the house. Percy is here. Tony in the house. The SS. He says, you made it to the Bookmap channel like a boss. Oh yeah, I'm a top pick for the Bookmap channel. They love me there. Hola to John. Willie T, good morning to you. And Tom Gunn. Saw the tweet. Thank you, sir. Feel free to share. Feel free to retweet. John H. Hi, y'all. Ike is here. Good morning to you. All right, so let's take a look at the NQ and see if it's any different than the ES and what sort of levels we might be watching this morning. Okay, so NQ not quite as bullish as the ES. We do still have that weak all-time high because the high was made in the overnight market. That's around 29.90. So that is the potential target to the upside. Same thing as the ES. If we can get above yesterday's high and we can turn that into support, which is around 29.20, if we can turn that into support, there's a pretty decent chance that we'll poke up and test that overnight high. What happens beyond there, we'd have to wait and see. It could either be a look above and fail, or we could get continuation. So we'd have to look for new buying above the overnight high. The reason I say that the NQ is not quite as bullish as the ES is because of the spike. So technically they didn't close inside the spike yesterday, which means there wasn't a spike up. And the overnight had to pull back down to yesterday's fairest price to do business in order to bring in buyers. Okay, so that's not bearish. There's absolutely nothing bearish about that. It's just less bullish. People aren't chasing price on the NQ the way they are on the ES. Okay, so I would describe myself this morning as bullish anywhere above the overnight low. We'll call that 28.48. Anything above that, I am bullish. If the market gets below there, if it gets below that overnight low, it is likely to come test the base of these two sets of single prints. So the first move would be around 28.20, and then we'll just call it 2800. Okay, so if the buyers want to remain in control, they got to hold this overnight low. Okay, they got to hold the overnight low and get back above yesterday's high. Otherwise, the NQ looks like it's more primed for a pullback than the ES is. I'm talking about a pullback in the NQ. Peter S., good morning to you. Mr. Ree, good to see you. Welcome. If you got any questions, feel free to throw them in the chat. I'd be happy to answer. Remember, just because other people aren't asking questions doesn't mean you shouldn't. A lot of the people that follow me have been following me for years. They've heard me explain all this stuff before. They know what I mean. But if you're new here and you have no clue what you're looking at on the screen, ask lots of questions, and I'd be happy to explain. There's probably other people that are equally as curious but too scared to jump in the chat. John says, I question. I question that. You question that people don't have questions? I don't know what to do with that. Good morning to Scalping Strategy. Frito says, I have no clue in general. Well, I guess really none of us do. We're all just playing the probabilities. Okay, so talking about the ES now once again. This morning's high that we just created here around 56.90, that is what we call a weak high. The reason that we consider it weak is because it reversed right at the previous day's high. Okay, just one tick below it. And that tells me that a lot of those sellers are short-term traders. They're scalpers. They're just looking to make a quick buck. And so they have stops up here. And that creates a magnet for price to come back to. One, if they're just scalpers, they're not going to ride the market lower all day long. They're going to take profits somewhere inside this overnight range. And as soon as they start to take profits, then that momentum flips, comes back up, then their stops, those that didn't get out, become targets for the market to the upside. So weak high increases the odds we will find support and come back and test it. I'm pointing out a lot of different support levels here, guys, because I don't know exactly where the support will come in. Anything above 76 is bullish to see. The goal is to find support and then get above yesterday's high. That's what the bulls got to do if they want continuation to the upside today. 200 dogs in the house. Debbie B is here. Grizzly Bull. Good morning. Good morning. Still only 56 likes, even though there's 100 people here. So only half of you hate me. Grizzly Bull says, hit the like or walk the plank. Hear, hear. Bart says singing would help. Oh, that it was true. Oh, that it was true. Okay, so we're back to test that week high. It remains weak. They got to get another point above yesterday's high to repair the weakness, to basically stop it from still being weak. What I don't like about this, though, is that it's FOMO buying. The market is chasing price to the upside right now, and that is more likely to run out of steam. So I do think we need to pull back into support once more. But of course, making higher highs on the daily is bullish to see. Once again, like 5th day in a row. Higher highs, higher lows, value higher. Bullish to see. But I do think they need to cool off price a little bit and bring in some stronger hand buyers. Anytime the ticks open all the way up here above positive 1,000, they really need to get back to the zero line before we can trust any buying. So the weak high is repaired. Let's look for a pullback into support. I see FOMO, so much FOMO. Short-term traders are chasing the price. Kathy says, my screen shows 5 likes. Yikes. Well, I hope one of them is yours, Catherine. That's all that matters to me, as long as one of them is yours. Or the dislike. You can tell me that you just don't like it. I'll take it. The SS says, I like your singing. I do the same silly shit. Yeah, I can't help it. Where the tune comes from, I have no idea. Why the need to express myself verbally, I have no idea. Lofta is saying, so you're saying the bounty is located outside the London Heights? The London highs. Ah, you mean London as in the overnight? Yes, that is what I believe. So first thing they got to do is they got to keep price above 76. So far, they've been able to do that. So that's bullish to see. Next thing they got to do is they got to keep price above 90, turn it into support. If we see both those things, if they're able to poke above yesterday's high and turn it into support, absolutely. I think that overnight high is the target to the upside. I'm not sure if we get any further, but I'm pretty sure we'll get there. And it's just a matter of momentum. You know, when I teach my courses, the way I talk about momentum is it's like a speeding train. Think about like a train that's moving very, very fast in a certain direction. That train doesn't just instantly stop. It doesn't just instantly go the other way, right? It has to slow down, okay? It has to kind of slowly come to a stop, then it can reverse and start going the other way. Well, right now, on a daily context, we have momentum, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, again and again and again. So that train is chugging along. It's not going to just instantly be like and crash right back. It's going to have to slow down first before it makes that pullback. And so there are signs that we would see in the price action that would tell us that that's happening. The first of those signs would be if we got below the base of the spike up from yesterday. So as long as we're above it, it means the train is still a chugging along. So if it was able to get to that level, 57.08 in the overnight, and it's still chugging in that direction, no reason it can't get there today. Choo choo. I'm sorry. I'll stop. I swear I'll stop. So you say to me, well, what about, Charles, if it does get below the base that spike up? Well, that's the market telling us this train is slowing down. The momentum is running out. Knapp says, does the POC need to be broken in the day session to be considered tested? A few days ago, the overnight broke the MPOC, but not the VPOC. I assume you mean the time POC versus the volume POC. To be tested, it just needs to be touched, but it doesn't have to go through. That's repairing a weak reference or a poor reference. So, for example, if you look at the overnight time point of control, actually it looks like it's the volume and time point of control. In the regular trading hours, we came down and poked it. We didn't poke through. It was tested. The fact that we got there is a test. Okay, so NQ is dancing right on that overnight low. That is less bullish to see. Okay? The fact that they're right on that overnight low means they do need to poke below to try to bring in buyers. And there's a very good chance if they poke below, they're heading down to 28.13. That might be enough to run out of steam on the ES. Okay, there's that poke below. Knapp says, does a test of the time POC need to occur during the day session? No. I mean, I would say it's pretty common that one day's session will test a previous day's, honestly, both VPOC and time POC. But it's not needed by any means, particularly when the market has momentum. As I said, I could easily make a case today for the market finding support in here and then heading up here and never coming back for yesterday's POC. Excuse me. Heading back for yesterday's POC. I just talk burped to 119 people. Good morning. Malcolm says, does anyone have a thesis on the railroad tracks in Bookmap that come in all day, every day? Dude, I have the same question. This is my guess. And I am just purely pulling this out of my butt. I have no idea. But I think it's designed to throw off the day trading bots. because there is still liquidity spread all throughout the order books like it normally is. But when you have these huge nodes, it's usually about 3 to 4 levels with about 400 contracts per level. And by keeping just that much exact liquidity always a few points above and a few points below price, it throws off what the order book looks like. It makes it harder to see where are the larger nodes throughout the order book. You know what I mean? Or I should say harder to see the like medium-sized nodes throughout the order book. So I think someone somewhere figured out that there was an algorithm doing something, and they've created this as a way to fuck with that. But I'm just speculating. I have no idea. It's very unusual. And we talked about this yesterday. You know, traditionally when you see something like this, what tends to happen is sometimes price will poke into it. There'll be like orders up here and orders down here. And every now and then price is able to poke into those orders. But this, it literally never does. It moves tick for tick with the price all day, every day, and never fills. So it's just a distraction. It's just there to try to mess with something, you know? So my guess is mess with computers. Nap says we're not communicating well today. You meant touch during the overnight session. I don't pay attention to that enough to be able to answer the question, to be honest with you. But as you can see, last night, the overnight didn't come anywhere near the POC. And that was because, you know, all night they were waiting for CPI. So they didn't want to go up or down. And then CPI was better than expected. So they had no reason to go down. Okay, so the NQ just backfilled that, almost backfilled that first set of single prints. They still have one more single print down at 28.20. So if the buyers want to take control of the market, they need to hold that and turn around and get back up through the opening price on the Q, or they will pull down to the next set of single prints, which is down at 790. Jay says, sure makes the Bookmap worthless. Not worthless, but worth. Yes, I would agree. It makes the Bookmap harder to read. It's just like a giant distraction. And I have a feeling that's what it's for. Scott says, I have been looking into a bunch of stuff this year, and I think a lot of it also has to do with zero-day strategies that dominate the market nowadays. Single stops plus market maker. Sorry, strangle stops plus market maker. Yes, sir. We have been talking about that a lot lately. So for those that don't know, and I'm sorry to bore the regulars who've heard me explain this a million times, but everything has changed for bigger players and how they operate. It used to be larger players would buy underlying shares. So they'd buy, stocks. And then they would purchase puts against those stocks. So if they're long a stock, they would buy a put to protect them if the stock goes down. If they are short a stock, they would buy a call to protect themselves. It was a hedge, okay? And they would generally buy very far dated hedges. They would buy options that expire in 3 months or 6 months or a year. And so day to day, the value of those options wouldn't change that much. And most of the time, those options would expire worthless, right? Most of the time, it was just an insurance policy. And unless some crazy event happened with whatever stock they own, they would just let it expire worthless and they didn't really care about it. But because nowadays there's 0-day options available in everything, including the indexes, and there are, you no longer have to have humans making decisions to buy and sell things. You can create algorithms that can work instantaneously to do that. These larger players have basically figured out they're better off hedging their positions with 0-day. So let's say, for example, you own a stock, Apple or whatever, and so you want to buy some puts to protect yourself from that. Well, if you buy a put that's dated 6 months from now and the price of Apple goes down today, you don't gain anything from it. You know what I mean? Because you're holding that option for 6 months or whatever. But if you buy a 0-day option today and tomorrow and the next day and you just buy a new hedge every morning, right? On the days where it goes down, you actually make profits. And so you can actually make profits off of a position going against you intraday on a particular day. And as long as it turns around and starts going back up the next day, who cares? So you've got all these large players that are playing in the 0-day market now. And they're buying hedges, both calls and puts, depending on how their portfolio is positioned on a daily basis. Well, okay, great. So we say, no big deal, Charles. There's a little more speculation happening in the options market. Well, who cares? Well, the thing is, a majority of options that are sold by firms that are called market makers. And their entire business model is just selling options. They don't speculate on what price is going to do. They literally just sell options. And whatever you want. If you want to buy puts, they'll sell you puts. If you want to buy calls, they'll sell you calls. And then what they do is they have a very complex system for protecting themselves from whatever the max risk is to them. So if they sell more calls, they have a way to stop that stock from going up. If they sell more puts, they have a way of stopping that stock from going down to sort of protect themselves. They have their own hedging. Okay. So now you've got all across the market, you've got this constant tug of war happening intraday every day between the people that are hedging larger positions, the people that are selling those hedges, hedging themselves. And so markets are just so much more complex now. It's not really what it used to be, where it used to be like, are people bullish? Do people feel good about the market? Great, it's going to go up. Are they bearish? Great, it's going to go down. Everything is about how these market makers are hedged and where the max pain levels are for them. So it makes intraday trading incredibly, just volatile. But that's the name of the game, and it ain't going to change. We're never going back to the good old days when the market used to just rotate for a little bit and then trend and then rotate the rest of the day. Those days are gone, baby, gone. It's all this that we've been dealing with lately where, the market goes absolutely nowhere for 2 weeks. It just grinds and grinds and grinds in the range because the market makers don't want it to go anywhere. And then it's finally able to break, and then it just makes massive moves. And then it just goes sideways again for another 2 weeks and so on and so forth. Days like yesterday where the market, I mean, if this was a few years ago, this would be unheard of. A look above and fail of the previous day's range that creates a poor low and then trends all the way into the close. Like that it just makes no logical sense, right? But if it's computers, it makes perfect sense, because where is an algorithm going to stop the market from going lower? At the low of the day. It doesn't want the market to go below that initial balance low, so that they're going to halt the market exactly there and reverse it. What's the max pain to traders who all day long are trying to short or buying puts, right? To just keep trending higher and higher and higher straight into the close. This is how they do it. Okay, so we've now officially broken above the previous day's high. This is bullish to see. We are holding the spike. We are holding the 45-degree angle on the overnight. Both of those are signs that that train is still chugging along. So the next sign, can we turn the previous day's high into support? We'll call it half back at 56.90. Can they hold it? If they can, I'm bullish to test the overnight high. We also need the NQ to pass back through its opening price. Let's go see where that's at. Okay, still hasn't been able to pass back through the open. So NQ remains weaker than ES this morning. Design Knob in the house. He says, just buy with reckless abandon. Father Powell will not let you fail. Listen, it's a bull market, you know. John Q says, do you think that regulators will come after prop firms if they're taking too much away from the real markets with their sim market? No, not at all. I think they are a tiny little drop in an ocean of liquidity, and nobody cares. Jay says, or will the brokerage firms also offer prop trading? No, not the legitimate ones. They can't. The business model of prop trading is screwing people over, right? If all you have to do is open 2 prop accounts at 2 separate companies, go long in one and short in the other, right? And whichever strategy works, you pass that account, and then they give you $50,000 to trade with. Okay? If that was real, if you were really getting a real $50,000 to trade with, that company would be out of business overnight, because they would be giving huge sums of money to gamblers who have no idea what they're doing. So the business model is convincing people to keep signing up again and again, and then just hoping that they'll break one of the rules and they won't have to pay them out ever. It is a pyramid scheme. So a legitimate company can't get into that. Frito says, Tesla is the only strong NQ Mag 7. Yeah, Tesla's been on a rip. Look at that. I mean, that's bonkers. Y'all ready for this? Yeah, it seems like some resistance at 278, but it's blown through every potential resistance like a knife through butter, like just nothing. So the next major one will be up there around 295. Okay, here we go. Testing the overnight high. Can they hold it? Oh, sorry, yesterday's high, not overnight high. All right, so that is a look above and fail of yesterday's high, which means we don't have the momentum. Not yet. The market needs another dip to bring in some discount shoppers. So we're looking for support inside the overnight range. So remember, bigger picture, it is still bullish as long as we're above 76, but not bullish enough to get continuation right now. They should have been able to hold that high. So I now consider us in a chop zone as long as we remain inside the spike. So as long as we're below 90 and above 76, we're likely to go sideways here on the ES for a bit. And it would make sense because we really need these ticks to cool off and come back to the zero line. Looks like the NQ could not hold those single prints, so NQ is heading back for yesterday's opening price, $27.58. Looking for support there and a bounce. It's liquidation time. Come on, y'all. It's liquidation time. Andrew just subscribed. Welcome, Andrew. RP says, do you look at gamma? We're deep in positive gamma region at the moment, so should just slowly melt up, in my opinion. I don't, but I want that discussion to happen in the Discord. I want to get that going. So feel free to chat about it there, and I'll learn more from reading what you guys have to say. Geo says, why the opening price versus the low of the day or yesterday's value area? The opening price is just the next one where something changes, right? So you got momentum. Oh, there we're at yesterday's opening price. You got momentum, right? The market is going higher, higher highs, higher lows. It's moving up. Well, where is that going to change people's minds? If today's price starts to get below yesterday's opening price, that's a level that'll change people's minds. And there you go. They're getting more bearish. It's liquidating. So that is now increasing the odds that today's market wants to test yesterday's low at, we'll call it 2,700. Okay. If it gets below yesterday's low, this is what we talked about with that train analogy, right? That would be a sign that the daily momentum is coming to an end if the market makes a lower low today. And that might mean we need a bigger pullback. So this now is truly the last moment for the bulls to save the queue if they don't want it to liquidate further. But they could, because we liquidated basically from the A period low to where the price currently is. And that gives discount shoppers a chance to step in. A lot of times the market has to break before it can rally. So there is absolutely a chance the buyers could reverse it here, but they got to do it literally right now. Or we break yesterday's low and then all bets are off for the bulls. I would say both markets. All right, so we're not getting support in the 45-degree angle of the ES, also less bullish to see. So same thing on the ES. If the buyers want to stay in control, they got to reverse it right now above 76. Or we look to liquidate down to the first week reference on the ES as well. Can they hold it? Nope. So no bounce on the base of the spike up. You know what that means. It's getting bearish. That increases the odds. The market needs to head down to 56.46. So the next question I'm asking myself is, does support become resistance? So we'll liquidate, we'll bounce at one of these major nodes of volume, either right now at 73 or at 68. And then I watch to see, does the overnight low become resistance? If it does, I'm bearish for that larger pullback. And I bet the Q broke the low. There it goes. Okay. Things are changing. So now the NQ has a lower low and a lower high than yesterday. That is a sign that the daily momentum is coming to an end and increasing the odds in the days ahead that we either get a larger pullback or we start to go sideways at higher prices. So now we're watching yesterday's low on the NQ to see if that starts to become resistance. Does 2704 become resistance, or can we pop back up into yesterday's range? Okay, new selling at the lows increases the odds that we're heading to 64. The next question in my mind is that all the market needs? Does it just need to repair this first week reference and then it can turn around and head back up? Or do we need more selling to get back down to 53? I'll be looking for new selling here at 64 for continuation lower or a reversal to head back up to the overnight low. Jay says the ticks are not flushing. Scooball says ticks are bullish. Price is going lower. Pretty new normal nowadays. Yeah, I think the one will catch up with the other. Right? If futures are still selling off, probably because of icebergs, bots forcing the market lower. Yes, sir. But the underlying shares are being bought up, the futures will catch up, or the underlying shares will catch up and sell off. This is still a liquidation on the ES. Scooball says it can lead to a choppy day inside the previous day's range. Yes, it can. So we have to just take it one step at a time. Do they repair the weak reference? If they repair it, do they get support and reverse? As we now are getting a bounce here, does it turn the overnight low into resistance? If it does, we look for a test. You know what I mean? So if we come back up and we get resistance, we look to come back for the low. If we get through the low and we get support, we expect for the price to come back through the open. If we don't get support, we look to backfill the single prints. We just take it one bite at a time. One move at a time. What is something we can see that we can trust is going to hold? And at this point, it's either going to be resistance around the overnight low or support just below that week reference. Or the opposite, right? No resistance, move higher. No support, move lower. One of those scenarios. Scooball says it could always just be a liquidation to look for stronger hands. Yes, sir. And we will know that's what it is if we don't turn the overnight low into resistance. And if honestly, if the NQ didn't look so much more, bearish, I would be on the side of it's going to bounce and we're going to head back up through the open. But the NQ is weak. Shit's weak. So I don't know. I need to wait for more information. Yeah, this is tricky, man. Ticks and price are not moving together. So what I'm trying to figure out now, we liquidated the market, okay? So that means we squeezed any of the FOMO traders that were chasing price this morning. Any of the overnight traders, they all got squeezed. So they're all flat now. They're all squeezed out. So the question is, what comes next? Do the dip buyers buy the dip and reverse the market back up? Or do new sellers start to pile on looking for continuation lower, right? That's the tug of war we have here in the C period. So I'm looking at the ticks to try to figure out which is which, and it's hard to read right now because price is going down while ticks are going up. Stay tuned. I'll let you know when I'm sure. One way or to other. NQ looks bearish. So C period turned yesterday's low into resistance, increasing the odds the market is going to break lower. If the NQ starts to one time frame lower, meaning the C period low gets below the B period low, and we leave behind these single prints down, that is a sign of momentum down, which is bearish to see. ES still in chop zone. A lot of questions about the Russell here in the chat. I don't focus on the Russell. Not that I think there's anything wrong with it. If you trade the Russell, good on you. It's just, you know, one day the Russell, if you're trying to use it as a signal for the ES, one day the Russell will make you think you should be bullish, but the market will go down. It'll make you think you should be bearish, but the market will go up. It can send a lot of mixed signals. So the way I trade is by just focusing on one market. What's happening with the ES? Who cares what's happening with all the others? Who cares if it's rotation or anything like that? What's happening with the ES? Is the ES getting more buyers or more sellers right now? Are the support levels holding or are the resistance levels holding? That tells me what to expect to come next. Then I know how to take trades. The more information I look at, the more I try to look at individual sectors within the ES, or, you know, what's the Russell doing versus the NQ, or what's happening with commodities or anything else, the more complicated it becomes. The more sort of random my analysis becomes, and it's more just guessing. Well, I think this should happen or whatever. Whereas if I just purely look at the price, if I purely look at, is the market going up or down? And when it does, is there more sellers or buyers? That gives me better opportunities to take trades. It's just the way my brain works. And right now on the ES, I'm 50-50. I'm bearish on the Q, but I'm 50-50 on the ES. It could break higher or lower from here. And I think resistance at the overnight low is a sign it's going to break lower. But we may just need to repair this weak reference, and then it turns around and heads back up. So I'm looking for support here, and then I'll have more information. And when you say to me, you say, but Charles, the market is moving. Don't you need to be in a trade? Not really. Because if momentum is over on the daily time frame, right? We broke out of this balance area down here. We got momentum to the upside. If that momentum truly has rolled over, which we haven't confirmed yet, but if it truly has rolled over, the market's either going to go sideways up at higher prices, in which case there'll be lots of opportunities to make money once I know that's what's happening, or the market will get a larger pullback to try to backtest the breakout, in which case there'll be lots of opportunities to make money once I know that's what's happening. So if in this moment I have to wait for a little more information to be sure what's happening, well, that's just fine. Fine by me. Choppy. All right, we took out that iceberg at the low, creating a poor low, increasing the odds we're going to start one time framing lower. Uh-oh. That is bearish to see, the fact that we are one time framing lower. However, I want to give a caveat with this. There's a very real chance that they're just pushing the market down to find support and reverse it right back up. So only sell resistance that you are absolutely convinced is a good entry to go short, and don't fall in love with the trade, because I do feel like we're about to spend a very choppy sideways day inside yesterday's range. Okay. And I see the first potential support at 62. And that is just because of what's happening with the ticks that I have that opinion. The ticks are going up, or I shouldn't say going up. The ticks are going down, but they're holding the zero line. But price is going down. So what we got was a liquidation break plus new selling, which is bearish and means the market is likely to keep going lower, but not enough new selling to really be a substantial move to the downside. What will change that? If we can start to get these ticks below the zero line, then you get the follow through with price. Okay, so that first week reference is now repaired. So at the beginning of the live stream today, I said, I think the highest probability is that we continue higher. If we're going to start to sell off, I will explain what to look for and when with that. Well, we've now reached that point on the selling off. So on the way up, the market has left behind a lot of weak references. The way weak references work is they are like a magnet pulling on price. So the more and more magnets that we create, the harder it is for the market to keep going higher. Okay, because there's just like a lot of power tugging on price, trying to pull it back down. However, it doesn't necessarily have to get to the very last of the weak references. Sometimes all it needs to do is repair the first or the second or the third weak reference, and that's enough to bring in the buyers, and then the market continues higher. So we know the momentum up is over. Okay, that's confirmed now. The question is, are we just going to go sideways at higher prices for today and the days ahead, or are we going to get that larger pullback with price? We call this balancing off excess with either time or with price. The way we will figure that out is the weak references. So we just repaired the first one. If the market reverses right now, comes back up for these single prints, then that was all we needed to do. And that tells us we're going sideways. If not, if we get new selling, it means we need to come back for the next week reference. Okay? And we just keep playing that game all day, all week if need be. When there's momentum down, we target the next reference. If it's repaired, we look for a reversal. If we don't get it, we target the next reference, and so on and so forth. Right now, the momentum is still down. Will says the S&P 500 ticks have been below the zero line. Oh, you mean the ticks that are just the stocks in the S&P 500? Interesting. Okay, so once again, new selling at the lows. Bearish to see. That increases the odds. We need to backfill the single prints to 56.53. And we will look for support there. If we don't get a bounce at 53, we'll look to repair the weak reference at 51. Scooball says, but Charles, trending on the daily is still on for the ES, not the NQ. Yes. So we might get a sideways day inside yesterday's range, but intraday at this moment, we left single prints behind in the B period. That's a sign of momentum down. We're getting new selling at the low. That's a sign of momentum down. And the next week reference in need of repair is backfilling the single prints from yesterday. So that's a target. If one of those things changes, if the D period prints and gets above the C period high, I'll know the momentum down is over for today. If we can't backfill these single prints, I'll know the momentum is over. But for now, we have momentum down. I would feel a million times more confident if the ticks were below the zero line. That's a huge contradicting signal. But for me now, I'm seeing new selling. And when you have a liquidation plus new selling, you are likely to get follow through in that direction. I would say if you don't trust the momentum down, you could choose not to short. You could choose not to sell resistance, but I would not buy the market. Not yet. Okay, so now as we print the D period, we have left behind a poor low and a set of single prints from the C period. The base of those single prints from the C period are likely to act as resistance for continuation lower. So the same way when we had momentum up yesterday, let's just expand out this profile real quick. Okay. The same way that when we left behind the single prints in the F period, they were a sign the momentum was going to keep going up throughout the day. Leaving behind the single prints in the B is now a sign of momentum down. Okay? So as long as the market continues to one time frame lower, we should assume the market is going to keep going lower. Now, there absolutely is a chance that all we'll do is backfill these singles from yesterday and then run out of steam and come back up. But we shouldn't assume that ahead of time. We should just see if that's what happens. The assumption should be we'll bounce, come back to these singles, bounce again, and continue lower. Okay? The momentum is to the downside. We don't know how far down yet. I'm also watching these ticks very closely. If the momentum is going to continue to the downside, they should be able to get below the zero line by now. We've now been one time framing for more than 30 minutes. So if the ticks hold the zero line, the one time framing will come to an end. If it breaks, it will continue. Screwball says, have you ever seen the ticks look like this on a liquidation? Yes. It is something that happens more frequently these days. But like I said, it's one thing at a time, you know? Right now, price is saying it's going to keep going down. Let's stay focused on that. If the ticks make it so you can't short, that's fine. Just wait until they do tell you you can short. Knapp says ticks are there now. Well, can they hold it? That's the question. I'm not impressed that the ticks can get below the zero line. It'll be if they can stay there. All right, so we are now looking for resistance here around 56.64 to 66 area and continued selling. What we talked about earlier with the ticks, this is now playing out to tell me the higher probability today is that the market is going to go sideways inside yesterday's range. I do still think we need to come back for these lows. We still have single prints that are unfilled from yesterday. That is a magnet for price to come back to 53. And the momentum is still to the downside. But the fact that they could not keep the ticks below the zero line after this much of a move in price is a sign that the momentum is coming to an end. So I have a feeling that either 53 or 51 will be the last weakness that we need to repair, and then we go sideways from there. So I'm looking for some resistance here and a test of the lows. All right, so just to go back and repeat what I already said and bore the living bejesus out of you guys. The resistance at the base of those C-period single prints was to be expected because we still have this weakness left behind from yesterday, which is acting as a magnet to pull price to it. However, the ticks still at this moment are holding the zero line, which tells me that this momentum down is likely coming to an end very, very soon. So I'm looking for a bounce either here around 53 or perhaps down around 49. That could be enough to reverse the market for the day and we just go sideways the rest of the day. If we get new selling below 49, then I'll be bearish for continuation to the downside. But otherwise, I think this might be the dip. Right, Chao? Right now. Yeah, so both markets, ES and NQ, are in the same position. So NQ has just retraced the last 3 days worth of momentum in a single day. So that's either it, and now it reverses and comes back up, in which case we know the market, broke higher and is going to go sideways at higher prices, or new selling down here would mean further downside continuation. So both markets are in a place where they either reverse for the day or we get new selling, which would be very, very bearish to carry forward. Oh, second liquidation. Ram V says poor low is another reference for yesterday. Yes, sir. That's the next one. So if we don't reverse now, if we get more new selling here, we head for yesterday's low. Wow, we're gonna completely engulf yesterday's range today. That's so gnarly. So yeah, we are getting new selling at the low. The momentum continues. The next target is yesterday's low at 56.40. I gotta say, I did not think they would get this much of a sell-off. Look at that. Yesterday had a very big range, and we completely retraced it today. Absolutely gnarly. So next potential support is going to be around 56.38. Remember, when it comes to these weak references, you got these weak references that you leave behind. You never know which one is going to be enough of a dip that the market can reverse. So each one you just ask yourself when you get there, do we get new selling? If so, you look to get to the next, and so on and so forth. So the next one is yesterday's low at 56.40. It looks like the market needs that one more dip to get there. That might be all it needs for a reversal. So once again, we'll be watching that low for new selling. Thank you, Fighter Pilot. Appreciate you. As always. John says it needs more. Yeah, apparently it does. In about 1 minute here, we're going to print the E period. So we'll be in exactly the same position as we were in the C. Once we print the E down here, we will have another set of single prints intraday today. So that will increase the odds of a push up, and we'll look for resistance there around 55. Ram V says ES volume is heavy today. Yes, certainly relative to the recent past, the last few weeks. So this might be a little bit easier to explain on the daily chart like this. So you've got balance, this range right here where the market was going sideways for the better part of a week and a half. We broke out of that balance that led to momentum to the upside. So now there's two ways that we can balance off this momentum to the upside. We can either do the same thing we did here, which was we had momentum up and then we just went sideways at higher prices. So we can just go sideways up here at higher prices, or we can get a pullback with price. Okay. So then we would come back to back test this. Yesterday's low will be a great indicator of which of those two is happening on the ES. The NQ already looks like it's balancing with price, not time, as it's engulfed the previous 3-day range, but now we can find out about the ES. Does it also need to pull back with price, or is it going to be with time? And what happens at yesterday's low will tell the tale. Dun, da, da, dun, da, 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 da. There it is, folks. An engulfing day. Today's range has completely engulfed the previous day's range. So that means, without a doubt, the momentum to the upside on the daily time frame is officially over. We've made a lower low on the daily. Okay? So, as I said a few minutes ago, the question is now, are we going sideways for the days ahead, or are we pulling back further with price? We will find out right now. New selling down here below yesterday's low is bearish for continuation lower with price. If we look below yesterday's low and fail, if we pull back up into yesterday's range, and then we get cessation of one time framing in the F period, then it'll mean we're going sideways for the days ahead. But for now, the momentum remains to the downside. We are looking for new selling down here. DNK says NQ is 100 points from the previous bounce area low. It can't be. Do you mean the previous bounce area high? Yeah. Yeah, it's about 200 points from there. 150. Yeah, I mean, there's no ifs, ands, or buts about it. This is very bearish for the Q. The ES could reverse here and just go sideways, but the NQ looks like it does need a pullback with price. So, yeah, I'd say the first target to the downside, and this is over the days ahead, is 2420. And then 20, probably, yikes, I'd even say 2170. For the Q. Not necessarily today, but in the days ahead. It's bearish, you know. They engulfed 3.5 days in 2 hours. I mean, that's bad. All right, so we are back below yesterday's low. The ticks are at the zero line. This is the tug of war happening here, and we will be monitoring for continuation lower. As we print the next TPO, the F period, if we get back up into yesterday's range and we get a 7 millionth bounce on the zero line, that will likely be the end of the momentum to the downside. We'll get cessation, then we'll go sideways inside yesterday's range. But if we print the F period and make a new low, then down, 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 the market will continue to go. All the way to 56.28. All right, here we go. F period. New selling below yesterday's low, looking for continuation to 56.28. If they're able to get back above 56.45, then the momentum to the downside is likely over. But it looks to me like we got more new selling. The momentum continues. And finally, the ticks are along for the ride. We may get a little bit of a small bounce right here around 32, but I do think we're heading down to 28. It may be a little bit of a slower grind now, as we had these two very strong rotational days where we rotated quite a bit in this range. So this was, very thin range, easy to push through, but this was a lot more two-sided trade. So they'll likely have to grind their way to get down to the poor low at 56.28, but that is where I think we're going ultimately. This is balance with price, not time. There it is. The trend continues. Jay says, had you shorted at the high of the day, pre-market, you could be buying a home on Cape Cod. Not quite. But yeah, there's, in my opinion, no way to have shorted, the high or the overnight high. The best you could have looked for was a short of the look above and fail of yesterday's range. But it didn't look like it was going to get much momentum then. So I would say the earliest, the way I approach trading, you could short was the break of the spike up from yesterday. That's still not a bad day. Pretty good. Dun dun. Dun dun. Look at those ticks. Okay, so here is the last chance for the sellers to remain in control. I think they will, smack the market back down right now. If not, if they are able to break through this resistance and get above the E-period high, then we know the move to the downside is done for the day. But my guess is there's one more smackdown ahead. Can they hold it? Tony says, Charles, did you see my post in the discourse about the order change filter on Bookmap? Hides those order brackets that have been following price the last couple of weeks. I did not, but I'll go take a look. What are my filters? What am I looking to filter? Size percentage? My man. Look at that. I don't know what's happening technically, but that is much easier to look at. It's fucking up my bid-ask spread, though. I think it's still just calculating. Okay, so as I said, the move down to repair the next poor low will likely be a very choppy one. Okay, it was easy to cut through the levels above because we'd spent very little time and brought in very little volume up there. Okay, if you just look at the cumulative volume, it was very, very thin up here, right? Because we literally just spent less than a day up there. So it was easy for the market to get from there to there. But now we're back in an area where we spent some time and we had some two-sided trade. So we're going to have to really grind and fight our way through the support now to continue the momentum lower. Okay? As long as the market continues to one time frame, the poor low at 56.28 is the next target to the downside. Okay, no matter how choppy the trip is. If we do get, we're getting a new TPO here in 1 minute. If we do get cessation, then it's over, right? Then that was as far as the market was going to go, and we'll go sideways inside the range. But as long as we continue to one time frame, the higher probability is continuation lower. Okay? Even if it doesn't feel that way because it's suddenly gotten very choppy, that is still the way it works. It's also worth noting we now just pulled the value area against the low of the day, which is bearish, and the fairest price to do business lower, which is bearish. So the momentum continues as long as we continue to one time frame. And we are in the resistance as we speak. B. That's all, folks. All right. So that is cessation of the trend down. That increases the odds that the momentum to the downside is over for today and that the market is likely to go sideways for the rest of the day. The first order of business for the market is to try to backfill the single prints left behind here in the D period and then later on in the day up here in the B period. Since we spent so much time and brought in so much volume at the lows, I don't know that we're going to be able to get back up to that B period. My guess is we're going to get resistance right here, somewhere around the halfback, around 56.65, and then just go sideways in the lower end of the range. But this does mean we are likely done with downside continuation. So any push lower will likely rotate back up. Any push up will likely rotate back down. What a day, guys. 2 days in a row. Just when they were making us bored out of our minds. One day of trending higher all day, the next day of completely retracing it in a couple of hours. That's what the market do. It bores you and then it blows you away. As far as bigger picture, it is less bearish that we were able to look below and fail yesterday's range. So as we talked about with these poor references and weak references, the fact that we repaired the poor reference at yesterday's low and then got cessation means we don't need to go back for this poor reference, which means we might be going sideways for a few days here, that the market might be bouncing with time, not with price. So that is less bearish to see. And sets us up for some rotation here for a day or two. What would change my mind and get me thinking we were going to continue lower again? If the market were to work its way below that F period low and get new selling down there. Again, to me, that is less likely to happen now. Not just because of the look below and fail, but also the ticks all day. Someone's been buying something all day long. So no reason the market can't start to retrace here. If we do get that new selling, I will be bearish for continuation lower. Let's just close out today. I'm going to call it quits there. Let's close out today by looking at the daily chart and just once again talking about balance and excess to put things into context. This was balance. This was excess. We're now back in a phase of balancing, unquestionably. There's two ways to do that. One is to go sideways again at higher prices. The other is to pull back with price. So as long as we don't make a new low again today, the sideways way is more likely in the days ahead. Okay. If we do make another new low today, then it's the pullback. With that, I will say goodbye. I'll miss you all to death. We have 87 likes today, but 108 people hanging out. So if you liked the fact that I went public on today's stream, smash that like button. Give me a few thumbs up on your way out the door. I really would appreciate it. Thank you all, and we will see the members of the Pirate Traders Brigade tomorrow morning in the private stream. If you're like, wait, Charles, the what? What's that? If you head to piratetraders.io, you can sign up for the brigade right here. It costs $10 a month, and you get my live streams every morning to give you my insights on the day and answer questions. So if you have been considering joining, now is the time. All right. Goodbye, everyone.